10-year note yields moved lower after the CPI print. CPI came in as expected across the board. Saw yields move lower down to 435, but quickly they reversed and moved higher, getting back above 440 by the mid-morning, and by mid to late morning, we're north of 440, getting closer to 445, where we closed out the day. Yields were up about 2 basis points on the close. Now, we didn't quite get to those post-election highs of 447, but we came very close. And again, seeing yields dip early after the number and then rally, closing up 2 basis points at 445 today. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you will notice that after printing year-to-date highs early last week, after we got through the U.S. presidential election, after we got through FOMC, after we got through all that data, we saw volatility move lower, moving down to 1-month lows. Now we're down to the levels we haven't seen since early to mid-September. Despite the fact that we saw yields moving higher today, volatility continues to move lower. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means to get our in-the-moment look at the job market via the claims number. We'll also get PPI, a little follow-up to CPI today, and then we'll get sort of the highlight of the week. If CPI wasn't the highlight of the week, this would be the Fed Chair will be speaking, giving his comments on the economy and on policy. It'll be his first speaking engagement since last week's November FOMC. And since the market has seen a shift in Fed rate cut expectations, it will be interesting to get the Fed Chair's take. So after seeing yields move lower down to 435, they rallied back up higher, closing the day closer to 445, up about 2 basis points ahead of tomorrow's claims, PPI, and Fed Chair Powell.